First thing you want to do when you turn on the cash flow analyzer and you've got your property package right there ready and raring to go, and I am providing you with a sample property package, just a couple of the pages that are important in this demonstration so you can see exactly how I grab the information from what the brokers give you. So first thing you want to do though is go to the input data screen. Now in this particular video series I'm going to be jumping back and forth between this screen and the rent roll and the expenses and the cash flow analyzer as I put the information into the spreadsheets. But first off, I'm going to take you through just how to get around here. There's the input data section is broken up into 5 categories. All right, the first category is the rental income and expenses. Second are the property costs and characteristics. Third is the resale valuation method. Fourth is the financing, and the fifth is the income taxes. Now, first thing you do when you come to this particular screen is you can jump right over by clicking on the rent roll, taking you to the rent roll category, which is the same screen that you would get to if you clicked on this tab up here. Same is true with the expenses. You can click on the expenses, fill in the blanks there, jump on back over to the input data screen. So it's very easy to jump around on the cash flow analyzer. Now, the next thing you want to do is come down here to the property costs and characteristics. It shows up, the default is single family. You can put in multifamily or apartments. It doesn't really matter. I always tend to go with the multifamily right there. If you have the purchase price, you know what the purchase price is going to be, you can put it in right here. I leave this part blank at the moment, and I'll show you why in a second. Little trick that I have. Now, the initial improvements, if you feel that there's any type of CapEx that needs to be done on the property, if the broker is telling you that there needs to be CapEx, you'd want to put this information in here. Closing costs can go in here as well. You can also, if you have any type of a fee for putting together the syndication fee, you can put right here up in these closing costs. Reserve amount, if there's any type of a reserve amount that the bank is requiring you set aside on a monthly per unit basis, you can stick that number in here, and then you can add in any more. And you can see Doug has actually put in some comments sections, so you can just put your cursor right over there and it'll give you an idea of what types of information is going into that particular section. Now, we're going to come back to that, as I mentioned, with the contract purchase price as we get a little bit further in the analysis. Next, we have the resale valuation. Over here, you can choose a different method. What I typically use is the cap rate based upon the current year's NOI. This is what's going to calculate out what the resale price of the property should be. That's what I want to know. This information is very, very important. What I also want to put in here is the current cap rate. Now, I can get this typically from the broker's package. If it's not in the broker's package, and I know this market well, and I know what type of properties in that market of this type of property trade for, I would know that number and I would insert it here. But what I'm going to do is use the broker's number from his property package, and I'm going to input it into this number right here. Now, right below it is the future selling expense. Okay, now that means that when I go to sell the property, what's it going to cost our partnership in percentage value in order to sell that property? How much are we going to give to a broker? Are we going to keep any ourselves in the form of a disposition fee? How about any type of closing costs? What's that going to cost us? So in here, what I typically do is I leave the number at 6%. All right, that's going to come up on the cash flow analysis when we're calculating out what the future value of the property is going to be and what our net proceeds from the sale of the property are going to be. So as you can see, folks, I'm getting into some aspects that are pretty advanced. I mean, for a new investor, they may seem advanced, but the nice thing is that this cash flow analyzer handles all of those types of issues, and it really makes you look brilliant when you're putting together your numbers. Now down here under the financing, you can either use the percentage on a contract price or on the total cost of the property. We're going to always keep it at the contract price. You can put in the down payment percentage, and typically what you're going to do is always use this number if you can. If you're not using a if you're doing an assumption and the number is a funky number based upon the outstanding principal amount, you might need to actually manually put a number in there. But I tend to use this figure right here. As you can see, it jumps over to 30. Bring it down to 20, takes it to 20. Now, because we haven't put a contract price in there, we haven't told the system what the contract price is yet, it hasn't calculated out the amount to borrow. Now, in here, you put in the interest rate. Now, because as an investor, you should know what the interest rates are and the terms are like for the type of property that you're quoting on. Now, in the master class, you're going to learn about financing options. We're going to go into that in depth with a good friend of mine, so that you will get a very good understanding of what types of numbers you need to put in here based upon the type of property that it is. Okay, now in this particular case, and I'm going to jump back to this in a moment, and you'll see the PDF property package that I've downloaded with this video series. The property that we're looking at is a high quality solid B asset. Now in that case, we're typically going to be looking at what's called agency paper, Fannie Mae, Freddie Mac, FHA. We're probably going to be looking at Fannie Mae paper, which is always going to be 20% down, not always, but typically 20% down. The interest rate right now, as we're going to record this, is approximately 4.5, and the term is going to be 30 years or 360. If it was 25 years, you put in 30 there, 300 there. So you're going to put, as you can see, it says in months. We're going to put that information in there about the property, about the interest rate, about the terms of the financing. If you were dealing with a different type of property, maybe a Class C, maybe a $1 million property, maybe one that you're not going to be able to get any type of agency paper on, your terms are going to be different. And as an investor, you've got to know that ahead of time. And we help you through that analysis in the master class so that you are fully aware of what you need to do to make it happen. If you're going to pay down the mortgage anymore, you can put in an additional monthly payment. Loan origination points, typically we'll put a 1 right there. And that is it for the financing. Then finally, we deal with the income taxes. Now, I tend to leave this blank. And the reason why I leave it blank is because I may be dealing with a bunch of different investors. Everyone's got a different tax rate. Everyone handles their tax situation differently. So I don't want to put anything in here that is unique to one investor but different to all the rest. So in that case, I'm going to leave the information about the income taxes blank. All right, so right now we've put in as much information as we can in the input data screen, and that is going to be it for this video. Tune in, click on to the next video where I take you through the rent roll analysis, and we will look more in depth into the actual property package that was sent over. But in this case, that's all I'm going to show you in the input data screen. At this point, we will be jumping back to it once we input the income and the expenses, and I'll show you exactly what I mean when that happens.